Hello and welcome to your Daily 5 for the 13th of January. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands, and I will be hosting the show today. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs. And of course, they will be the weapon of choice for this show, at least the starting point. You can find my contributions in the RRG blog on the site, as well as on StockCharts television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. If anything related to sector rotation and relative strength has your interest, please check out these resources, or even better, subscribe to them so you will get notified when new articles and episodes have been uploaded. We are starting our journey to pick 5 stocks on the RRG that shows the sector rotation for the 11 S&P sectors. That's on your screen right now. You may have noticed that very recently, over the last couple of weeks, especially the defensive sectors have been showing a very strong rotation. And when we talk about defensive sectors, we're talking about healthcare, staples, and utilities. And it is the utility sector that I want to focus on for today. And here you see the tail for the utility sector over the last 13 weeks. So that's the last quarter, so to say. You see a very nice rotation from improving into lagging and then hooking back up from lagging into improving again, and now heading rapidly towards the leading quadrant at a strong RRG heading. So that is a promising sector as such. Now the next thing I want to do is dive into the members of the utility sector, look at the breakdown of that sector. And we can do that in the next RRG. And here you see all the members of the energy sector. And to start with, I have set the benchmark to $1, which makes the RRG a tool to look at price trends, to look at absolute price trends. I know that it was developed as a tool for relative strength, but when you put the benchmark to something that is stable that never goes down, it becomes a tool to look at price trends, to look at normal price trends. And that's what you see here. Now the interpretation is exactly the same. So what we see here is that the majority of stocks in this sector are traveling at a strong heading. They're traveling into that northeastern direction, and that is good. There's a few that are rolling over inside the leading quadrant, ED, EIX, EXC, and EE. But the majority, the big move here is to the northeast, and that is strong. There is one that's really going counter trend, and that is AES. You may see that here through all that thick green. There's one red tail that's moving down. Let me highlight that for you. That is really the single one stock in this sector that's in a downtrend. It's going down, and that's probably not a very good long idea. Now in the next step, we will put this to the S&P 500, which is our general benchmark, and you will see a similar pattern with a slight change of positioning for all these stocks, but it's not surprising to find that most of these tails are still pointing to that northeastern direction because the utility sector itself is on a strong heading. So it's to be expected that most of the stocks inside that sector are at a strong heading, and that's what we see here. Again, you see AES again as the outlier, moving counter trend from improving into lagging. And there's a few that are in the red and a few other tails that are rolling over. But the general trend, both on price and here against the S&P, is up. Now, the final test is when we put that against the utility sector itself. And that's where we're going to find and look for interesting stocks. And now you see that the picture has changed quite a bit. And it's now a closed universe. All the stocks in the sector make up the benchmark, which is XLU, and now we can try to find interesting names or names that desire our attention. There's a few that immediately stand out. I mean, P&W is one that I immediately want to look at. Another one would be ATO because it is inside improving and powering right in there. I'm less interested in the stuff that's here in weakening and the greens that are rolling over. I want to look at AES because that is definitely one that we need to check out because it's moving counter trend. And then there's a few here in this cluster of blue tails, which I worked my way through and found a couple of names that I think are worth checking out. And in the next RRG, I have put those 5 names isolated from the rest against, I need to change this to utilities. So that's what we'll be looking at. And now you see 5 names that I want to check out: P&W, ATO, CMS, L&T, and then AES on the downside. If we bring in the individual charts for those 5 names, then that is what we find. And you may notice that I'm using for the individual charts the underscore. So it's the unadjusted price series because the utility sector is a high dividend paying sector, which distorts the historical prices when it comes to support and resistance levels. So I prefer the unadjusted series for the charting analysis. Now, if you look at Pinnacle West, and you see that here's the reason why it's inside improving and pushing right up. If we look at the chart, it dropped out of that range and it's now coming back. That is, in general, that's a good sign, and it tested that ultimate low here around 62.5. It looks as if we're completing that bottom formation, and we now have a lot of upside inside that range. This is a bit of an aggressive trade. It's a very early call. If we look at ATO, that's a little bit more progressed in its move already. You see that ATO is on the verge of crossing over from improving to leading. You see the turnaround is taking place in relative strength. The green here is already above, the red is almost above 100, and we're waiting for ATO, for Atmos Energy, to actually get out of that range and push higher. So I'd be watching levels 107.5 and higher to put on new positions in ATO as a good opportunity on the upside. We look at CMS. We see a similar thing. It's a slightly shorter tail, but still it's moving in the right direction. It's pushing against the upper boundary of that range here. So above 66, and then we've got a few intermediate levels here. But when we get out of that range, then there is a lot more upside potential for CMS. And you can see that here in the relative strength, it looks as if we're putting in a low. We're not there yet. We broke the diagonal, but more importantly, I'm watching a break back up this horizontal line, which used to be support and is now acting as resistance. If relative strength can take that out, combined with a takeout in price above 66, 67, then more upside is expected for CMS Energy. If we go to LNT, you can see that it is pushing against all-time highs. That's a good thing. Relative strength itself is not fantastic, but you can see that the RRG lines are picking up, and that's what we're seeing here. Nice long tail rolling back up into improving and moving towards leading. Looking for a break above 62 for a follow through to the upside with more relative strength to come. And then the final one is AES Corporation, and that's the negative one. That's that big red that's moving down. Look at how it's pushing against support here around 22.5. Relative strength has already broken lower. If this one breaks below 22.5, there is much more downside to be expected. So whatever you do in the utility sector, please forget AES, because I think that's going to be a painful position in the next couple of weeks. And that concludes your Daily 5 for today. Thank you for watching, and I hope to see you again at a future episode of your Daily 5 very, very soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.